Thank you. Everyone's doing great. We just did our election special on the first segment today. Everything you ever wanted to know about trading the U.S. election, we did during our first segment today. So please go back to your archives and review. If you did not see it, it's going to have a unambiguous title like How to Trade the U.S. Presidential Election or some such thing. Right? And erupts of knowledge. It's okay, I thought, hello. Are you dollar Mexican peso, by the way? Everyone's talking about how this means something, because of what happened over the weekend. Very reminiscent of this. I remember when this weekend gap meant something, all right? And they were buying pounds so furiously going into the Brexit vote because they were so sure they were right. And how did that work out? Not so well. I really wouldn't be trading the peso here, folks. But let's take a look at some things we should be trading or could be trading. And by the way, listen, high volatility, some people are good with high volatility. They like high volatility. Some people not so much. Let's review our Aussie trade from our elevator trade setup from last week. This trade is now completed, and I just want to go through this. So we had I'm sorry, it's not completed. Duh, okay. We get our entry, but we still have not made it down to the first target, and we have not been stopped out. So things have been kind of quiet with this. We're down a few pips on this right now. No big deal. I might close this out ahead of the election. I don't know. I could close it now and take a very small loss. So, I might do that. I don't know. Let's see if anything interesting happens over the next 24 hours. As far as Australia is concerned, well, there really is no big news coming up today. Any big news that happened, there was a German factory order number that came out earlier that was pretty bad, but that's many hours ago now, so there's really no way to trade that. As far as going forward, it's a really quiet day. Looking ahead here, really quiet day over the next 12 hours or so. Just nothing really of any consequence. Definitely nothing of consequence happening in the U.S. And then we get the U.S. presidential election tomorrow. We're going to get some business confidence surveys out of Australia. I don't really see anything being big market moving stuff. The one thing that might move Aussie ahead of the election results would be this. China, exports, imports, and trade balance. This is a bigger market mover for Australian dollar, right? Australian dollar is highly influenced, of course, by action in China, and exports in China have been dropping, and that could be obviously a sign that demand is weak from other parts of the world. But regardless, right, however these numbers come out, you could see some volatility on the Aussie when these numbers occur. Okay, and we'll definitely get these China numbers before we will get any results from the U.S. election. Keep in mind, the U.S. election results may not be, it could take a very long time to determine what happened. I mean, we saw that happened in the year 2000 with the election. I think it was Bush versus Gore. I think it took weeks to sort it out. So you just never know. And it would only be fitting, this race is so crazy. This election campaign is so crazy that a wild finish would not surprise me a bit. Okay, so anyway, a little bit of data that could move Aussie. Other than that, nothing really. So I'm just going to leave Aussie open for now, but I might change my mind on that before the election. Let's take a look at some other pairs here. British pound has been on the move. We said for the longest time that it was forming this sort of double bottom pattern, and it finally broke out with authority and popped up near 126. Now this is more, you might say this is it pound strength or dollar weakness? It's really pound strength. What happened here that got people excited? Well, there was a court ruling last week in the UK that said Brexit must be approved by Parliament, which strikes some folks as a little bit strange because Parliament represents the people, and the people already voted. But a court ruled that Parliament must approve. But there are a lot of also now there's counteraction, and we see the pound falling again, right? As Theresa May, who is the new prime minister in the UK, says does not deter us one bit, and that they're going to move forward as planned with Brexit. So it's a little bit confusing because no one's ever been through this before, and expect it to remain confusing. But the chart gave the indication long before the court did. The chart was saying this is oversold, and this is forming a bottoming pattern, and it's about to pop up. At this point, I don't see this as a potential trade. It is interesting to me, though, to review to see what happened here. Now, as far as things that do seem like potential trades, well, and a little more of on the election, that the Japanese yen is probably going to be a big indicator here. The Japanese yen, right, U.S. dollar JPY gaps sharply higher as the S&P 500 gapped higher. Here's the S&P futures up 29. It's a huge move prior to today's open. And you can see that. So I'll show you the gap on the ES. The gap on the ES is right here. The ES is the S&P futures. But, you know, it still looks kind of bearish to me. Very big rounded top despite that gap higher. Something might be worth considering as far, maybe a short, maybe you fade this move. But short term only, right? I don't want to be in the stock market tomorrow. I'm not really planning to open any long-term trades, but you could certainly short-term trade this. This might be a move worth fading. If that gap were to fill, that's a big 20, 30-point gap on the S&P 500. It's a pretty big move. But whatever I do, I'm going to be out of the trade before the election results start coming in. Remember, the election results, tomorrow's the election day. The results do not start coming in until tomorrow night, and it could go on all night long. You know, and who knows how long this could go on. But anyway, there's your gap. That's a news reaction, and you can see dollar yen going right with it. So dollar yen is probably going to do whatever the stock market does at this point. There was our entry to sell short. We said, hey, if it comes down, right? This circle shows a big bearish pattern. If it comes down, that creates an entry opportunity. Beautiful move down. Now it's gapped up the other way. This is what you got to watch out for. The days leading up to Brexit, we saw there were a lot of gaps. Big gaps everywhere. And you could see that again. Not only that, I mean, if you look at charts of things like gold, right? Gold makes a big move on Brexit. Look at gold. There's your gold on Brexit. Look at that. Wow. Right? Just slamming. Gapping down today. Apparently, you know, stocks up, gold down. Today is the overall sentiment. And also U.S. dollar probably higher. Yep, U.S. dollar gaps higher here. So U.S. dollar against the board going higher. So you can see, you know, when the results were leaning toward Clinton, dollar goes higher, then Trump, dollar goes lower. They like Clinton this morning, but things can change. I do notice that WikiLeaks just released another set of emails. I don't know what's in it, but I do know this, that if they're saving something for the very end, Now's the time, right? If they're sitting on something big, there's really no point in waiting anymore, right? Tomorrow's the election. So I would imagine if they're going to drop anything big, it'd happen today. So that's something to keep an eye on, right? If you think that if you go through today and WikiLeaks does not drop anything of significance, then you'd have to say, okay, that's definitely pro-Clinton, because they don't have anything. If they don't drop it today, I'm assuming they don't have it. So if they have a bombshell, it'll come out today. And that could change the stock market, that could change the peso, that could change the dollar, that could change every chart that we're looking at, which is why you're really in a danger zone if you're just gambling, if you're just trying to chase your tail on these matters. We said earlier, placing your orders far away, might make a lot more sense. And in other words, anticipating a big move in either direction, just trading based on volatility, just putting, your dream price out there. Like, Apple's a very popular stock. I'm sure that there are people who dream about buying it at 90. Well, now, who knows? Now might be your chance. You might be able to buy it at 90, or you might be able to short it at 140. I really don't know. I mean, I might be able to short it up here. Could happen. There's a lot of things that could happen here, right? We don't know. That's the whole point. There was a very famous philosopher who said, to know what you know and to know what you don't know is the mark of one who knows, right? So we know that we don't know what's going to happen, but one thing that we have been clued in on is the Swiss National Bank is talking about intervention again. Now, this to me is a very interesting chart. Look at this dollar Swiss. Closes here, opens here, huge gap up, but now pulling the other way. What are they really saying? What they're really concerned about is the euro against the Swiss franc. Why? Because Europe Switzerland is in Europe. What a strange looking chart. Tell me, how often do you see that in the Forex market? Gap up and then just repeats the same candle. They're very concerned about the Swiss franc getting stronger based on election results. This is news that has come out of Switzerland today. The Swiss National Bank is announcing this today as we speak, that they will counteract a move if this drops. They're planning to push it back up. I'm not saying that you should trade it. I mean, it's obviously anything involving the Swiss National Bank is pretty dangerous. They've been very irresponsible in the past with how they've dealt with these type of situations. But you look at this chart, I mean, it's been a year. You would almost say that it looks like they've put a floor under it again. It almost looks like it, right? Not really, but there's your Brexit, right? Huge volatility on Brexit. You're going to say, Ed, that doesn't make sense. Why would Euro Swiss have huge volatility on Brexit? And I'm telling you right now, if you look at that chart, Euro Swiss could have huge volatility on the U.S. presidential election. All right, it certainly had a huge volatility on Brexit. Look at these. This is one candle. The wick goes all the way up to 110 and all the way down near 106. Okay, that's it's a 400 pip range, which is just brutal for this currency pair, which doesn't really move that much. And so you could see a big move here, but the difference is that they're going to do something about it if this drops. They're not afraid to push it back up. Dangerous situation. Okay, so good to know, right? If you're in a Swiss franc trade right now, you'd better be aware that the Swiss National Bank is talking about artificially strengthening the Swiss franc. They're talking about it right now. Okay, so this is something that could be very detrimental to your trading. Okay, let's take a look at oil. Look at that. How beautiful is that double top? You know, we drew that double top on there weeks ago and we kind of left it. It's just, man, oh man, what a thing of beauty that turned out to be. Price of oil just plunging. You know what's interesting is there was a big earthquake in Oklahoma overnight. And Cushing, Oklahoma is a location that is very important to oil and natural gas. Because you figure we get a tremendous amount of oil and natural gas out of the Gulf of Mexico. And a lot of that is refined in a place called Cushing. By refining it, they take it from the raw product and they turn it into something that you can use. A tremendous amount of storage is there. A tremendous amount of pipelines is there. They don't really refine there anymore. But a lot of storage and a lot of pipelines are there. Well, last night, there was a big earthquake in Cushing. Not a big earthquake. 5.3 is pretty big for Oklahoma. Doesn't usually get earthquakes. But that could certainly create some activity here. It really didn't do much. You see, have a little gap up in oil, small gap, but we're still under 45. But it is interesting. 5.0 magnitude earthquake causes significant damage in Cushing. That could have really affected, a little bit stronger, that could have really affected the price of oil, which in turn could have affected the dollar, which in turn could have affected everything else. Don't be caught by surprise. Okay, earthquakes, very often there's like a minor earthquake followed by, it could be followed by nothing, could be followed by minor tremors, or could be followed by a major earthquake. Sometimes you have more than one event and more than one occurrence within a short span of time. Just be prepared. Can you comment on gold short-term and especially long-term? We'll take a look at gold next. But that is a fascinating chart of oil. And look at how it just fell right to where? Support. Bounce, bounce, and probably bounce. Okay. Can you comment on gold? Let's take a look at gold at GC. Again, this is just ripping back and forth based on the elections. This gaps down just like the S&P 500 gaps up today. This has been a tough one. I got to say, I mean, when you look at this chart, watch this. I know that I don't know gold very well. I mean, I know that I have not done well on my gold projections. It just doesn't seem to matter what the chart says. Like, for example, look at this pennant. What does this mean? This is a bear pennant, and it means that gold is going lower, except it doesn't. It goes the other way. Okay, gold has been really, really tricky to trade. It doesn't seem to adhere to technical analysis very well. It doesn't seem to follow news very well. In other words, news about gold doesn't seem to move it, or often doesn't move it the way you would anticipate. So based on what we see, so I was going to say, look, I thought it was going to go lower right here. And it makes a liar out of me, breaks out of the pennant the opposite direction. Now what is it telling us? I don't think it's telling us anything. This is a big mess. This is not a pattern. You've got a little bit of an uptrend that was based on Trump gaining in the polls. Now you have this gap down. It seems to be based on the news yesterday that the FBI is no longer investigating Hillary Clinton's emails. So it's just like the Mexican peso. Trading this right now is just like trading the Mexican peso. It's not the dog, it's the tail. And we're looking at the tail trying to figure out which way the dog is going to go. And it's the other way around, right? It should be the other way around. So this seems to me like a reactionary instrument rather than a predictive. And I don't see this as any type of pattern right now. Sorry, I wish I could be of more help. Sometimes not every chart gives you something you can work with. And this is a perfect example of this. There's nothing on here that I can use to trade. There's nothing on here. But it is worth noting that this call was completely wrong. And I'm just using technical analysis, which says sharp move down, consolidation, should be followed by another move lower. In this case, it wasn't. Sorry about that, Joan. As far as silver, might as well look at some of the other metals while we're down here. Silver is a very similar looking chart. It has the bear pennant, and it does not come to fruition. Copper is interesting. Look at copper. Copper has been roaring for weeks, for the last 2 weeks, and this seems to have nothing to do with any type of election. Right now, this is the type of thing that I would prefer to trade. Something that's not being pulled back and forth based on polls or based on information about the election. This chart doesn't seem to care about the election one way or the other. I like that. I like that in a chart right now. This chart doesn't care who wins the U.S. election. The only thing this chart cares about is copper is rocking. If copper is rocking, that's one of the reasons, I guess, why our Aussie trade hasn't gone profitable yet. We're still sitting with a small loss. I might just close it. But this is indicative, in my opinion, of it's the opposite of gold. It's the opposite of the peso. It doesn't care. When Trump's winning, when Clinton's winning, it doesn't care. It just wants to go up. And that itself is telling us something. Big resistance here. Big for the entire year. 230 is resistance. Look at this. Look at all these peaks. Here. Early March. Late March. Mid-April. Early May. July, all through July. Here we are again. I don't really know why copper is strong. That's an interesting question. Usually when China's doing well, you see copper do well. But I don't know why it's doing well. All I know is it looks like it's about to take a break. So that's good for my Aussie trade. Somehow my Aussie trade has survived this huge run in copper. If copper breaks through up here, I'll know it's time to get out if I'm not already stopped out. But there's a good chance that copper reverses here, which would be very beneficial for my trade. Okay. All right, so they've just rung the opening bell on the New York Stock Exchange. You may have heard that in the background. And there's your S&P 500 chart. Nice big gap up, but I think it's very interesting to note this is not a very bullish chart, even with the gap up. What this chart is telling me is sell here, 2120. We're currently at 2110, so 10 more points. 10 more points on the S&P cash, and it'll be time to sell short. Why? Because this is a big level of support here, back from September and October. Nice bounce in October. And then even here, late October, there's a little bit of a bounce, and then it breaks. And that changes the whole polarity of the trade, right? So you were bouncing back here, bouncing here, small bounce here. Once it breaks, support, this dotted line was support, it becomes resistance. So this becomes a situation to sell short. You've got a big gap. This is a huge move, a big gap, and a nice run after the gap. But another 10 points or so, and it becomes a short. Very, very interesting potential setup. What does this tell us about the election? Absolutely nothing. Get all that stuff out of your head. But for a short-term trade, that might work. With the activities around the election moving the market, how do you recommend protecting trades against volatility? Well, I actually covered this during the previous session, but it's a very important question, so I'll be happy to delve into that with you right now. Here's the problem. The problems that you're going to face are these. In every market, including Forex, your stops are not going to be reliable during this highly volatile, highly emotional event, which is really describes Brexit too. Highly volatile, highly emotional event. Stops were getting filled, but they were getting filled hundreds of pips away from where they were placed, making them somewhat worthless. And that's a huge problem. If you place a stop and it gets filled 300 pips away, then you just got rocked. And you can't really be a good risk manager if you can't depend on your stops. If you can't depend on your stops, then you don't know how much money you're risking. So your stops are not going to be reliable. Know that going in, and maybe that's telling you, hey, it's not a good event to trade. What else could you do? You could buy options as protection, right? Like a put is a protection, like an insurance policy on a long position. A call is an insurance policy on a short position, but the cost of that insurance is skyrocketing. Here's the VIX. VIX dropping today at the open, but look what's been happening. The VIX has been skyrocketing lately. Why? Because the cost of insurance when volatility is high or when anticipated volatility is high, the cost of insuring your trades goes up. So, your stop is going to be fairly worthless. Options could be used, but they're going to be more expensive than normal. When you take these into consideration, you understand that you really don't have normal protection that we normally have in the Forex market. We're just not going to have it. The brokers understand this, and many of them have already lowered our leverage. Like I think FXCM lowered it from 50 to 1 to 20 to 1 on the British pound, and I'm sure others have followed suit. And it wouldn't just be the pound. I mean, you would think that it would be on a lot of different currency pairs right now. So it's a very dangerous situation. My advice is if you're going to trade anything, close it before the election results come in. You have about 30 hours. No, you have about 35 hours before the election results begin to come in. So call it 30 just to be safe. So any trades that if I open any trades, they're gonna be closed. Trades that I have open, it depends. Very good chance I'll close my Australian dollar trade out within the next 30 hours. Okay. Could it be that gold will only move if and when global bust or huge event takes place? I don't know. I would say there are just so many different factors for gold, and a lot of it has to do with perception. In other words, it's moving on how it perceives this election playing out. Just remember this. The stock market dumped for 2 days after Brexit, right? This was Brexit right here, this arrow. Stock market dumped for 2 days because the world was coming to an end, except the world didn't end and we hit an all-time high on the S&P 500. Nobody knows. Everybody was saying the world was going to end and the stock market was going to crash. Stock market dropped for 2 days. It was an amazing buying opportunity. Who knows? Nobody at this point. Okay? All right, gang. That's going to wrap it up for today, but I'll be back with you tomorrow. So, until then, be safe, don't be caught by surprise, and watch out Careful about things like the peso and other things that some people are calling indicators. I'll see you tomorrow. Please come back and let's talk some more tomorrow. Everybody have a great day. Thank you for listening.